In this video, I'd like to talk more about how to build a trading strategy using two trading plans and one stock that I'm familiar with, Pfizer. Now, I really do like Pfizer as a stock to trade because of it has small moves, but they tend to be good trending moves. So we're going to say a couple things as assumptions here. First off, we're going to say that the two trades strategies that we're going to use are gap ups and pullbacks. Those are both good strategies for stocks that are going up, and Pfizer has been in an uptrend in the last few weeks. We're also going to look and say that Pfizer typically has a big move when it goes 25 cents. So we're going to say if we ever get 25 cents, we're definitely out at 25 cents because we know it's probably near the end of the move. Also, the goal is at least 3 times a day we're trying to catch 10 to 15 cent move out of Pfizer. Okay, so let's look at back on December 15th, 2017. We see Pfizer gap up a little bit. It's about 30 cents gap up. Now I'm going to watch it. Well, first off, I'm going to find it in the stock watch list. The way that I could find this is by right out of the gate looking at any stocks that are the strongest for the day, especially in my core watch list of about 6 stocks. So I'm going to notice that Pfizer is gapping up a little bit in the first few minutes of trading. And I'm not going to trade it yet. I'm going to watch it. And I'm not going to trade it until 10 minutes are up because I don't want to get mixed up in the initial volatility. So that's 2, 4, 6, 8, 10 on these 2-minute candles. It does say 1 minute because it changes for some reason, but these are 2-minute candles. And you know it because it says 940 right there. Okay, so right now I've got a range from here to here on the low side since the open. Once it starts to break out above here or below here, I'm going to go with it. And so right about there, I'm going to buy into this about 36.85. Now it goes up to 36.90 and it comes back down to 36.82. Now the question is, should that have gotten you stopped out? And the answer is no. If you haven't got at least halfway to your target, you shouldn't have moved your initial stop loss point because this is normal wiggles, as you can see. Normal wiggle room is what we call it. And so if I'm in at 85, I shouldn't be out at 82 for a 3-cent loser. Instead, that would have given up a big winner, as you see. And I hate it when I do that. Everybody does that once in a while. I hate that. So stick to your initial stops till at least you hit halfway to your target. Okay, so we're still in. And luckily, the stock starts to trend up. And once it gets up here, we know it's close to the end of the move because we've researched Pfizer. And like I said, it typically goes 25 cents at the most, in most cases, in one move. And so we're going to get out, and we're going to call it a 20-cent winner. Let's just say that's where I got out. Came up to here, came down, I got out, even though it went up a little higher. Okay, so I got one winner out of that. So let's look at pullbacks now. Now Pfizer has come way back down. We still don't know what's going on with it. It's bouncing around 2, 4, 6, 8, 10, 12. Right about here, I'm going to be buying into it again at $37 a share even because it's starting to, after several minutes, go back up and continue the uptrend. So I buy it at the whole number at 37, and it goes all the way back down to about 96 or 7, a few cents below where I bought it. But I'm not out. I'm expecting at least 10 cents out of it. So it goes up to 37.08. I'm not out. I'm still in. It's a slow mover. It's a snoozer. You got to watch it and wait. But then I get my move finally. It goes up to 37.15, starts to come back. That's where I would have got out right there because I made 10 to 15 cents on the trade. And that's what I was trying to do. I know that there are several moves throughout the day where I can get that in Pfizer because I've researched this stock. And so I'm going to lock in my profits right about there. And sure enough, we see a pullback. Again, would I have got back right in there? Maybe. I might have. And if I did, I wouldn't have made any money, or I would have got stopped out on that one. Okay, it came down to here, I probably would have got stopped out. Or if it went up and down, I would have surely gotten stopped out back here. Okay, so right now we're 2 winners and 1 loser. So we're up for the day, 2 out of 3. Okay, let's keep looking at Pfizer. Okay, let's see, would I bought into that? Yeah, I might have bought into that again, about 37.07. Comes back to 37.09 to 37.07, just a nickel there. And then it shoots up again for another almost 10 cents. So anyway, this is in lunchtime. So if I was even in that trade, I don't normally trade lunch, but if I was in that, I might have caught a little bit and then got out. Or I might not have been in the trade at all. But you see, by trading a stock that you know well, you know how far it's going to go and how much you can take when you catch the move correctly. That's very good information. That will really help you to set your profit targets, as well as where to put your stop loss. So let's go to Friday. This is December 18th. Let's look at this. So there's no gap up. It opened about the same place it closed the previous day. 2, 4, 6, 8, 10. So it's up here, and I'm not in it at all. I'm watching. If it goes back up here above 37.35, I'd buy it. Doesn't do that. It pulls back, and it's bouncing around, and I'm not in it. I don't know what's going on yet. Would I have gotten back in here? Probably not until right about there as it breaks up above 37.25. Would I have gotten 10 cents? Nope. Probably would have got stopped out on that one. Okay, lost a little bit. So we've got the pullback strategy. We've got the gap up strategy. We're doing okay with it, but haven't made a huge number of trades on it. Let's look at what happened on today. This is especially useful at the open when we choose a strategy and know how it works. Okay, look at how it gapped up and came down. How far did it gap up? About 5-10 cents. It's not that big a deal. But I would be looking to sell it short right there as it falls through the bottom and breaks to new lows right there at that price. Okay, now I probably would have exited right about here. 37.97 from 37.09. So I would have made my 10 cents there. Hopefully I would have flipped around and bought, but I don't know if I would have been that fast to do that. Bought in here and caught another dime up. If I hadn't, I surely could have watched it hit bottom at support, go sideways, and buy it again at 36.95 right there. Okay, and it wouldn't have stopped me out there. Wouldn't have taken a profit there. So I'm still in all this time. And then finally it goes up. Maybe I would have taken my profit up here. Okay, probably would have made a profit being very patient to get that. Okay, so anyway, the point is it really helps to know your stock, and you build a trading strategy based on knowing how far the stock moves under certain circumstances. Okay, and then you do that with every stock that you want to trade a lot. So you have your 3 to 6 core stocks. So that should help you no matter what trading strategy and trading plan you use. That's what you do. You see how far the moves are. You see how far and when the trends are and what the trend is currently for the stock over the last few days. And that'll help you to decide as you set up your trading plan how to do it. I hope that helps. And this is Greg Kilpack, and good luck in your trading.